If you run a smart home installation business in Australia, you are operating in one of the fastest growing sectors in the residential and commercial technology space. Automation systems, audio visual integration, lighting control, security, and network infrastructure all require significant equipment investment before a job is completed and paid. Clients expect high end equipment sourced and installed before they hand over a dollar, and that creates real working capital pressure, particularly as your business grows and you take on larger and more complex projects. Here is what is available, how it works, and what you can realistically borrow. Traditional bank lending is rarely the right fit for smart home installation businesses. Your revenue is project based, your equipment costs are high relative to each job, and unless you have substantial property equity, bank applications tend to stall. Non-bank lenders take a more practical view, assessing your trading performance and cash flow rather than trying to force your business into a lending template designed for larger companies. Unsecured business loans provide the fastest access to working capital without requiring property as collateral. You can borrow between $10,000 and $500,000 based on your business bank statements and average monthly revenue, with approval possible in 24 to 48 hours, for purchasing equipment stock ahead of a large installation, covering the gap between project completion and client payment, or investing in marketing to grow your project pipeline. Unsecured finance is the most accessible option. Equipment finance is worth considering for vehicles, installation tools, testing equipment, or high value technology items you hold as stock for multiple projects. The asset is the security. Rates are lower than unsecured loans, and the structure is often more tax effective with depreciation potentially deducted. For capital investments in tools or vehicles that will generate revenue across multiple projects, equipment finance is usually the smarter structure. A business line of credit suits smart home installers managing multiple projects at different stages simultaneously. You draw what you need when costs hit, repay when project payments land, and only pay interest on the outstanding balance. For businesses running 3 or 4 active installations concurrently with staggered payment timelines, a revolving facility is significantly more efficient than a fixed term loan. Invoice finance is relevant if you are working with builders, developers, or commercial clients on extended payment terms. You advance up to 85% of outstanding invoice value immediately after issuing the invoice rather than waiting out the full payment cycle. No property or business assets required. How much you can borrow depends on your monthly revenue and how long you have been operating. A smart home installation business turning over $350,000 annually can generally access $40,000 to $90,000 unsecured with clean bank statements. Add property as security and that number increases. Most lenders require at least 6 months of trading history. Most non-bank applications take under 15 minutes online. A commercial finance broker can match you to the lenders most likely to approve your profile before you apply, protecting your credit file. Brokers are paid by the lender on settlement and do not charge you directly. Use the free business loan finder at Reliable Business Tools to find which loan type suits your smart home installation business. 6 questions, a clear recommendation, no credit check, and no obligation.